Roll.
Calling the roll, Mr. Shrine,
Here.
Mr. Hairston, Mr. Tuma,
Here.
Ms. Baker. Ms. Baker is absent at the moment. Ms. Simon. Ms. Simon is absent. There is a quorum. Also like the record to reflect that Councilman Miller is in attendance.
Thank you. Is there any public comment related to the agenda?
No, Mr. Chair, no one is signed in.
Okay. Has everybody had a chance to look at the minutes from the last meeting of July 31st? The chair will move that we accept the minutes of the last meeting. Is there a second?
So move. Second.
It's been seconded. All in favor of approval of the minutes, or is there any discussion first? Hearing no discussion. All in favor of approval of the minutes, say aye.
Aye.
Aye. The minutes are hereby approved. First item for referral to the committee, if you could please read that in the record.
Resolution number 2017-0152, determining the services and programs that shall be provided and funded from the Veteran Services Fund in 2017.
Okay, there's a presentation from council staff. Love to have a little background too on this because I was in Washington DC about 4 weeks ago with fellow county commissioners and mentioned this idea that this is a unique thing. We are the only county of the 88 counties that is doing this, and suggested it to my contemporaries across the state that they too should be using their county veteran service money the way we are doing. So with that, give a little background on this.
Thank you, Mr. Chair. Michael King, council staff. Just as by way of background, because I know we have a couple new members this year and some members of the audience. The Veteran Services Fund was established by council back in 2012 to provide supplemental support for organizations serving veterans in Cuyahoga County. The revenues for the fund are derived from the unspent cash balance from the prior year's Veteran Service Commission appropriation. The Ohio Revised Code requires the Veteran Service Commission receive a certain percentage of our property tax millage. A lot of times they are unable to spend that full balance, and so historically they had reverted back to the general fund, but in 2012 council made a determination that those dollars should be spent to serve veterans in Cuyahoga County. So over the past 4 years, the number on an annual basis has varied between $39,000 to $750,000. This year's available balance at the end of 2016 was $461,117. So as we've done in the past, council staff informally solicited proposals from organizations in the community who serve veterans. We didn't solicit proposals from public entities, those listed in blue on your spreadsheet, or from Tri-C, which has historically received a portion of the 20% dedicated for workforce development and post-secondary education. The resolution before you today reflects council staff's recommendations for the 2017 awards based on the proposals we received and the Veteran Services Fund statutory guidelines. Ultimately, council has the final say as to where these awards are to be allocated. We merely ask that if there's an interest in making modifications, that as staff we have an opportunity to go back and work with the sponsor and the chair to put together updated recommendations rather than making individual changes on the fly here today. The spreadsheet you have in front of you shows the current recommendations. Second column from the right is this year's recommendations, and you can compare these recommendations to past year awards. If it's fine with the committee, I'll just provide a brief overview of the staff recommendations, and we can field questions as we go through.
Okay, and prior to that, just like to recognize Ms. Baker is here in attendance.
Thank you. So first on the list is Tri-C. Tri-C has, as I mentioned earlier, historically received 10% of the annual award. This is the fund's statutory requirement that 20% go to post-secondary education or workforce development. This year, that amount is exactly $46,112. Those go to scholarships for veterans in Cuyahoga County. We're also recommending about $85,000 be allocated to the Office of Homeless Services for the Veterans Families Program for move-in kits for veterans entering permanent supportive housing. This, again, is an award that mirrors past awards, and historically this past year, those dollars went to a contract with Frontline Services. We are also recommending an award of $50,000 to the Land Bank to expand their veteran housing program. They originally received a $100,000 award back at the inception of the program in 2013, and they supplemented $44,000 of their own money, and they've used that to assist roughly 30 veterans since that time. Then Legal Aid Society, we're recommending an award of $85,000. Legal Aid has been a consistent recipient of these dollars and is continuing to do good work in that regard. So we are recommending they receive their requested amount. Joseph's Home provides wraparound services for transitional housing for medically fragile and homeless veterans. We're recommending an award of $40,000. Towards employment, $30,000 for career pathway services for job readiness training, job search and placement, coaching and support for professional development of low-income veterans. And I should note, these dollars, as well as the dollars for the public library, which is the next one, are being credited towards the 20% dedicated to workforce development or post-secondary education. Then, as I mentioned, the Cuyahoga County Public Library, these were new applicants this year around. We're recommending a $50,000 award for their Get Worker Fit program. It's an end-to-end solution to give workers education and training, including career coaching and technological training, and the dollars would be targeted towards the unique needs of veterans. United Way 211's Help to Veterans program, we're recommending $70,000, providing free veteran staffed helpline to provide phone-based information targeted to veterans. This is another recipient that has been a staple of the program since the inception. And then finally, we're recommending a $5,000 award to support the restoration of the Chagrin Falls Civil War Memorial. Again, these were new applicants this time around. The memorial was originally erected in 1867. The total restoration cost is approximately $50,000, and this award represents last-in dollars that will fully fund the project. And I'll note, I'm happy to answer any questions about the staff recommendations, but we also requested representatives from each of the organizations to be here to answer specific programmatic questions if you have any, so feel free to ask.
And not asking them to necessarily take the microphone, but if you could just stand so that we could at least be thankful and recognizing that all the veterans' works, that everybody's here whose name has been identified. And I know I speak as a veteran myself, we appreciate everything you folks do to support those who gave sometimes the ultimate sacrifice and those who are out there on the front lines for us. So thanks very much for being here. I can't guarantee you how the vote will turn out next week at council meeting, but thanks very much for coming forward.
So with that, I'm happy to take any questions.
Sure, Mr. Tuma.
Thank you, Mr. Chairman. I want to thank all you folks for coming out here and for all the work you do, and certainly salute our veterans, including Mr. Schron. Ironically, I happen to be watching the documentary on PBS Vietnam, so I couldn't help but think about that as we talked about this legislation. So to Mr. King, just again to clarify, the color coding on here with the yellow and green, again, is that for educational services? Is that what that distinguishes that?
Correct. So the ones in yellow are ones that for this year we're crediting towards the 20% workforce development or post-secondary education. The ones that are yellow and green are outside entities that applied this year, at least one of which is new this time around. But we wanted to just add that notation that they're being credited towards that 20%.
Okay, and then as far as the awards that were considered, what was some of the criteria that was used to differentiate between the various organizations? Because there's obviously a lot of folks who are trying to do good things for people, and not everybody can get everything all the time. So what were some of the factors that you guys examined?
Sure. So, and this is actually something that we request reporting biannually throughout the year, and all of the organizations that received awards last year provided these reports. We request information about the number of veteran serves, the type of service that was provided, and the direct impact that those services will have on veterans as they go through. So, right. I mean, in our proposals, those were the types of factors we were looking at.
Okay. All right, appreciate it. Thank you.
Thank you. Any other questions? Yes, Ms. Baker.
I'm not sure if I heard Cleveland State. historically receives funding, and it's the same as the community college. Is there a reason why this year that was not included? Did they not
Yes.
ask?
Yes, absolutely. Cleveland State did not receive an award this year because due to some administrative difficulties, they were unable to spend their award from last year. We actually had to recut them a check, which we recently did. So they will be continuing with last year's award and basically using last year's award for this next cohort of student scholarships going into the new year.
Sure.
Thank you. The others that have been given the dollars, if they're new or if they're continuing, do we track to see how those funds were used? Is that done when they ask for more, or is it just done at the end of their cycle?
So we, as part of the resolution, we require biannual reporting. So we request reports be given to us around November, December, and then again around the end of June each year. So we got the reports from last year's recipients around June, and then we put out the informal proposal, request for proposals around July. And so these are the recommendations. And all of the entities that are receiving recommendation provided those reports from last year that are continuing on. So I'm happy to share those reports with you if you'd like more information.
Sure.
See that the 2013 is over 700,000, and then as we progress, except for 2015, we're around 300,000 and back up to 500,000. Is there a reason why these numbers fluctuate like that?
You know, that's a great question. I think that is ultimately a determination based on how much of a surplus is left over in the Veteran Service Commission budget at the end of each year. I know John Rice, their relatively new director, he's been there a few years now. You know, when he came in, it was his goal initially to try and spend down as much of these dollars to serve veterans through their budget as much as they could, but inevitably there are instances where they're unable to do so. I'm sure he'll be coming in for the budget season this time around, so if you have follow-up questions on their programs. I will note, as an aside, we do anticipate some legislation coming that will allow the Veteran Service Commission, for you to consider allowing the Veteran Service Commission to issue veteran ID cards, which is something that our fiscal office has been doing for a few years now. But last year, the state legislature allowed boards of county commissioners, county council in this instance, to authorize veteran service commissions to do the same. So we recently had a conversation about allowing the Veteran Service Commission to do that. So that will be coming forward shortly. So if that's the case, then that may be an area where they can program some additional dollars and serve some veterans.
Seeing no other questions, the percentage is actually mandated as far as what happens. So as our dollars fluctuate, so too will these dollars fluctuate. So sometimes there could actually be more money or less depending on what's going on in relationship to our own budget, but it's mandated by the state legislature on that. But what makes this unique, and again, I emphasize this, is that 100% of the dollars that were allocated from the very beginning are going to be used in a veterans related activity, unlike some of the other counties. And again, I suggested this to my county colleagues in Washington, D.C., that they should follow our model of what we're doing. Is if it's a veteran's dollar, it should be used on a veteran, some form of activity. It should not go back into our general fund, is what my belief is. And I think that I speak for the rest of my colleagues. And I know that you on staff do a yeoman's job of making sure you get this done. So congratulations to you also. I see we have Rick DeShant in the front row here, and last year and the year before that, we allocated money for the Fisher House. For those of you who do not know what it is, the Fisher House is the equivalent to a Ronald McDonald House. We are the largest veterans hospital in the country not to have a Fisher House, and just about 6-8 weeks ago, the deed transferred from the land bank over here to the federal government, and with any good luck, we will be breaking ground on that in the spring, and the county money coming out of this decision back in 2014 was the top-off money to raise for that. So not only are we going to have one Fisher House, we're going to have two Fisher Houses right here in Cleveland, Ohio. And so that all of you, again, can feel good about that, that's how these additional funds are going to be used. There's going to be, I think, two Fisher Houses each, which will have 16 families can go into each one of them, and that's pretty spectacular out there. So congratulations on that, and congratulations to everybody in regards to that. Is there any other questions in regards to it? But I think that it's nice to tell a story that not only tells a story for today's needs, but the Fisher House will be telling the story for families for generations to come here in Cleveland, Ohio. And so I think it's pretty exciting. Any other questions? Okay, I think that it would be appropriate to ask for second reading, suspension on this, so we can get the funds out there working on behalf of our veterans. Is there a motion to?
Second that.
Okay, it's been moved and seconded. And any discussion in regards to it?
Yes, Mr. Chairman.
Yes,
Clerk, please add my name. Thanks.
thank you. Any other comments? Thank you very much. All in favor of moving this forward for a second reading suspension to the next council meeting, say aye.
Aye.
Any opposed? Hearing none. Thank you very much, everybody, for coming here. I know that you didn't have to take the microphone, but we appreciate you coming. You're certainly welcome to stay for the rest of it, but you also will not hurt our feelings if you leave before some of the rest of the meeting portion takes place. Thank you.
Thank you, Mr. Chair.
Great job, by the way, on staff. Okay, if we can read the next item into the agenda.
Resolution number 2017-0161, making awards to various municipalities, each in the amount not to exceed $150,000 for the SBA Municipal County Small Business Financing Initiative Pilot Number 2 Program for the period 10/1/2017 through 9/30/2019.
Excuse me, anybody, before you leave, if you didn't get your parking, if any of the guests are here, you can get your parking validated so that if you parked across the way, we can help you out in that respect. Sorry about that, but I just saw him walk out the door. I thought,
Absolutely. Should help them out.
please.
Mike May, Department of Development. Thank you, Mr. Chairman. Basically, in July of this year, proposals were received from candidate municipalities applying for match funding awards from Cuyahoga County to help finance their program proposals for implementing and operating a small business financing initiative program within their community. Basically, this SBA Muni program, as we're calling it, involves the municipalities assisting small businesses to qualify for and achieve SBA guaranteed bank financing for their projects through performance equity grants, one term being used for this, provided by the program, amounting to 15% of a project's costs. Such grant, which supplements the business's own 10% equity in the deal, plus then a 75% SBA guaranteed bank loan. So 75% of each and every one of these deals would be a loan, a bank loan that is guaranteed by the Small Business Administration, which all combines to 100% of financing. We're calling this is pilot number 2 of a successful pilot number 1 program that was initiated with the cities of Shaker Heights and Cleveland a little under 3 years ago in 2014. Just a couple of the facts on this. To fund what is being called the Performance Equity Grant Pool, a combination of the respective cities' resources and county money that is being matched to what they're providing. Municipalities agree to provide $50,000 of their own identified funds to be matched with $150,000 from Cuyahoga County for a total pool of $200,000 for projects in their community. The county has identified a budget capacity in 2017 to provide $600,000 in matching grants to 4 SBA Muni County partnership programs for respective cities. We designed a competitive application process for the above stated funding opportunity and invited 22 of the county's inner ring municipalities to compete for the funding. 4 municipal applications were received on July 7th from Fairview Park, Lakewood, Cleveland Heights, and Maple Heights. The applications and the proposals were to meet certain threshold criteria involving clear funding commitment, that $50,000 for sure, departmental and/or staff capacity, and bank interest from their community's banks, which all four proposals have achieved those threshold criteria. We then evaluated the proposals based on criteria that crossed or traversed program description, basic program description, program creativity, and program impact. So as I said again, Fairview Park, Lakewood, Cleveland Heights, and Maple Heights all came in with actually excellent proposals, which fully and creatively articulated the city's understanding of the program's precepts, described well their detailed program approaches, specifications, targeting, and expected program impacts. So they all fulfilled both the threshold requirements and were very adept at and had put together very, very good proposals on all fronts. Examples of the creativity, in Fairview Park, they've instituted downtown priority areas like the Lorraine Road Corridor. They have a one-year holdback for some of the funds. Again, this would be a pot of $200,000 in their joint fund with our funds and their funds, and they're actually talking about withholding or doing a one-year holdback and during that first year to concentrate those performance grants and the loan packages with chronically vacant buildings and some other problematic areas, so as not to have all of the funds sort of whooshed out for various businesses and not really targeting or strategically applying that money. So I thought that was extremely creative. Lakewood has also primary commercial nodal areas that they're working on: Madison Avenue, the Berea Road Industrial Corridor. Cleveland Heights is combining their program with a business retention, expansion, and attraction program that they have had instituted for a few years now. So they're dovetailing that very nicely with that program. With that, as I said, I'll just go back and remind you that the pilot number one was a program that was instituted by us in conjunction with two cities, Shaker Heights and Cleveland, back in 2014. At that time, we had done a one-for-one matching formula and had a criteria or a minimum of $250,000 to be provided by the city, which we would match with a dollar for dollar amount. And in that case, Cleveland came up with $500,000. We were able to put together $1 million fund, and $250,000 came from Shaker Heights, i.e. meaning a $500,000 fund. Together, those two programs were very successful. Hence, we're doing this, another leg of this. They combined, they loaned to 30 small businesses, creating 55 jobs and retaining 96 jobs. The funding begat about $11 million in SBA-backed loans for all of these businesses and projects. Hence, and with the quarterly reporting that we got from both programs, we saw a real, very, very successful activity in all manner of small business, pretty much crossing the spectrum of the economy, whether it was small salons or whether it was trucking companies or you name it. They were being dealt with by the city of Cleveland. 5 loans were done in Shaker Heights, and 25 loans were done in the city of Cleveland, commensurate with the levels of funding that they had. So that's kind of it in a nutshell. We got again, we got very good proposals from all 4 communities. Hence, we agreed to bring to you a request to do financing or for $150,000 grants to each city that, again, would provide the $50,000 needed to get our match. And we're looking to council to help us effectuate putting together a grant agreement. We're working on that right now, the drafting of the grant agreements that would run 2 years from October 1st, starting at October 1st of this year for 2 years into 2019. Let's see, I think that's pretty much it. The county is working with all of the cities on a co-branding marketing kit, so that we're doing this in tandem with the cities and with the SBA to market this fully. And so that's in process as well with our communications department. I think I'll leave it there and ask if there are any questions.
Okay, questions from anyone on the committee? Mr. Miller? Mr. Miller, did you have questions?
Forget it.
My question, am I right that the loans that are made with the businesses, it's a combination of money from this fund, which would end up being a $200,000 fund from
Correct.
each
Each city would-
municipality? It's a combination of that money and SBA money, is that?
Yeah, one thing I didn't, one more technicality on this or detail on this program. So again, a city or a business that wants to do a loan and it, in effect falls slightly short of what a bank and its SBA backing would require from an underwriting standpoint, but is willing to or would, because of they're just shy on equity, they would be able to get that loan from the bank for up to 75% of their project, but they need a little more equity than the 10% that the small business can put in. So the pool that's being created by us and each respective cities, that $200,000 will supply what will basically be a 15% of the project to fill that gap. Again, it can be called either a forgivable loan or a performance grant, which is a 3-year instrument. Actually, it'll be on standby next to the bank loan. Again, that's SBA backed. And then after the 3 years, if all is going well and they're current with the bank loan, this 15% of the project performance grant or forgivable loan would be forgiven then. So that's the scenario that we're talking about.
Okay, I appreciate that report, and I'm happy to see this program come to my district. Thank you.
As are we, Councilman.
Other questions? Yes, Ms. Baker? Mr. Baker?
Just to have an understanding, the 50,000 that's coming from the city, is that coming directly out of their general fund? Is that something that they're obligated? And
Yeah, they are obligated, Councilwoman, and they are to show us evidence of that money secured and segregated, ready to go as we bring our $150,000 to the table. So what I presume that this is a general fund. It's from the city's own resources.
It is, okay.
It's not going to be from other resources. It's going to be from their wherewithal put into the account.
May I follow up?
Sure.
So if this 50,000 is coming from the city, are they, as part of their ask, in coordination already with the business that is going to be using those funds, and that they see the overall picture? How does that work?
Well, again, one other thing that, again, I'll put into this discussion. Again, this is really a program that each city is going to run called the Small Business, SBA Muni Small Business Initiative.
Okay.
It is, it must be staffed. Each city needed to have the capacity to run this thing on their own, to run the program, to attract, market, talk to businesses that are in the throes of working on SBA-backed bank financing. And once that hookup takes place, the business coming to the city then will inform them of this, will talk to them about this program.
Okay.
They will need to be underwritten and be fully approved by the bank for the SBA-backed loan. They then will get up to 15% of the project. If they can't come up with more equity, more than the 10%, that's great. But again, we're giving them a maximum of 15% in the thing. So this is it's having a program juxtaposed against a fund, a fund that's there at the ready to do these performance grants to, again, augment their ability to get basically a traditional SBA-backed loan that they fell just slightly short of, save for the equity.
May I just ask?
Sure.
So of these 4 cities, were there other cities that also applied? What is your criteria and how would you manage the dollars if there were more cities that qualified?
The indication was given to cities that basically we were looking at, because of, budget limitations, we basically saw the county being able to do up to 4 cities to do this. Interestingly, again, one of the things that was basically a self-selective process where, again, the packets went out to all 22 of the communities that touched, if you will, the city of Cleveland, i.e. Inner Ring.
Right.
And they chose not to come in. I'm guessing because they fell short on the 3 critical threshold criteria. The $50,000, number one, no ifs, ands, or buts about that. Capacity that was demonstrable
Right.
to run the program, because we would not be. And thirdly, bank interest from community banks that were doing business with the SBA or did the SBA lending. So those 3 things were absolutely necessary for them to even get in the door. And that basically ended up with 4 cities coming in on that front.
Great. And of course, I'm sure there's a follow-up.
Yes,
exactly
there will be
what they've
quarterly
done.
reports being made by the cities, as the city of Cleveland and Shaker Heights have been doing all this while,
Great.
with various metrics being judged or counted as they give us their quarterly reports about the activity that they're doing. They'll have to show us what business got what loans, what the loans were used for, how many jobs were created, and probably 5 or 6 other data points and fields.
Good. Thank you.
Seeing no other questions, ours is a grant. Is the city's $50,000 a grant, or is theirs a loan?
Oh, well, it would be, it's a grant, really. It's them putting in money into this pool to effectuate grants.
Okay.
So those instruments, that performance grant or forgivable loan, again, the cities are using 2 different terms, that goes into this deal. So basically that money is a grant, and after 3 years of performance is had, then that money is gone, not to be repaid.
So the city's not expecting repayment, and we're not expecting repayment?
Correct,
Okay.
correct.
Do we participate at all in the selection process of any of the
No, we do not.
businesses? So 100% of this is being decided by the city?
Yes.
As to who they want
And their loan committee processes for.
Okay, and then I assume it's done in conjunction also with SBA as to what they need to make it work. Is
Yeah,
SBA?
driving this is the underwriting criteria, and that's our base upon which the rest of this is built, and that's basically that they have to pass muster in a banking situation.
And how many business opportunities do they anticipate would come out of a $200,000 pool?
I'm guessing something like a half a dozen.
Okay.
The other thing I neglected to mention is that, and this is a precept that we put on this thing, those grants can't go any higher than $50,000.
Oh, okay, that was going to be my next question.
Yes,
Okay.
yes. So doing the math, if they have $200,000 and they do, 5, or four there, sorry about that, 4, then they've done that. Typically, though, the granting activity is on a more smaller scale than that. Not everybody's getting $50,000 grants, more in the realm of anywhere from 15 to 25.
Well, if $50,000 is going forward and that makes up the delta with SBA.
Correct.
Then you're only looking at fairly small loans relatively out there.
Correct.
Okay, all right. Is there a job requirements that we put in when we put our 150 in that we
No, Mr.
anticipate?
Chairman, we don't have job criteria at this point. No.
Okay, all right, so.
We'll be chronicling those jobs created. We saw good success from the From the activities of Cleveland and Shaker, there was a healthy number of jobs created. In that this is a pilot number 2, we didn't think that this was the right time to put an absolute job.
Yeah, just asking. And these are for end user businesses as opposed to they cannot be used for community improvement or anything of that nature.
Oh, correct. This is end user businesses all the way.
Okay.
Yep.
Thank you, Mr. Mayor. Any other questions based on chairs? Hearing none, is there a need to get this out for
Yes,
second reading suspension, I assume?
we would request that under suspension of the rules, if we could get this approved on second reading.
Okay, is there a motion from anyone?
So move.
I hear a move and second. It's been moved and seconded. Any discussion in regards to the issue?
Yes, Mr. Chairman. Madam Clerk, please add my name.
Okay. Mr. Miller? Pardon? Your name? Yeah, your name, these are on yours, okay, all right. Very good, okay.
Thank you, Mr. Chairman.
Wait, we still have to vote. Any other discussion? Hearing none, all in favor, say aye. Aye. Any opposed? Okay, so we'll be on next Tuesday.
Thank you.
Next item?
Resolution number 2017-0162, authorizing an economic development fund redevelopment and modernization loan in the amount not to exceed $2,500,000 to Link 59 leverage lender.
Okay. Is there someone here to present on behalf of this issue?
Yes, I'm Tony Stello with Department of Development. And just one quick correction on that. This loan had started out under the redevelopment and modernization program, but as it had expanded, we've included this in our new program, which is the place-based mixed-use lending program, which is geared towards mixed-use projects within the urban core.
And we do have a substitute before us here, so when we
Yes.
move it forward, we'll move it forward, and then we'll substitute with the
Okay,
substitute
great.
legislation.
Just wanted to make sure that was.
That is covering that, yep.
Okay, so this project here, it's Link 59 Leverage Lender is the borrower. It's a newly formed entity, real estate holding, for a project in the Midtown corridor in Cleveland, in the area between East 57th and East 61st Street, Euclid Avenue to the south, Chester to the north. What we're working on funding is a new campus of buildings there, and we are going to be putting in some funding to a 30,000 square foot vacant building. It was formerly Ace Fixtures. It's known as the Phoenix Building. This building is being renovated into office space for startup businesses. One of the identified businesses looking to locate there is a biotechnology business. It's a startup business that's growing. These are the types of businesses that the city of Cleveland has been targeting for what they term as the health tech corridor. And the second part of this project is a new supermarket that's being built. It's Dave's Supermarket. This will face Chester Avenue. It'll be a new store, about 54,000 square feet. And this fits into the project nicely, kind of makes it it's a more of a mixed-use project. So now we have retail and office use on the space. Outside of the project footprint is a new women's and children's hospital out of University Hospitals, which will be opening there. So it'll create a nice synergy to have the supermarket there, which has a pharmacy, allow the patients coming to the hospital to make one trip, and also have good access there to the health line just one block away on Euclid. We had presented this to our loan committee back at the end of July. We're looking at doing a $2.5 million loan. The total project is almost just under $22.5 million. As part of this project, so the reason this is kind of, there's two parts to the project. We're doing one loan and there's going to be two notes. And the reason for that is because some of our money, $1 million, is going to be inside of a New Markets tax structure. And it has has specific collateral requirements. The remaining $1.5 million will be outside of that structure. So the portion of the money that will be inside the New Markets structure is $1 million, at 3% interest at a 7-year interest only. The collateral on that will be, it's an assignment of the ownership interest in that, in the investment fund, because you can't take a direct collateral inside of the tax structure. And there'll also be personal guarantees from Fred Geis and Jim Doyle, and Dave's Supermarkets will be putting up a corporate guarantee because they will be the beneficiaries of the new market structure. That building will be. The remaining $1.5 million goes outside of the structure. So it'll be a direct loan into the renovation of the Phoenix building. That will be a principal and interest for 10 years based on a 25-year amortization with 3% interest, and it'll have interest only for the first 2 years during the construction of the project. And we will be we'll have collateral on the building as a shared first position on $1 million and a second position of the remaining $500,000. And we're sharing that position with Jobs Ohio, who's putting a loan into that building. As you can see, there are a lot of sources on this loan. The City of Cleveland is contributing heavily through a HUD 108 loan, and they had invested early on getting that site cleaned up and getting it ready for the development. This is one of the last real large vacant parcels in the Midtown area, and so this will be a really nice project that really helps bring a lot more development into that area. So the tenant, as I kind of touched on before, one of the tenants identified is Infinite Arthroscopy. It's a healthcare innovation and design firm. They're in the medical device industry. They have designed software that assists doctors during surgery, so it creates better outcomes for patients. That's basically a camera system that improves the surgeries so that it can eliminate some of the complexity of doing these arthroscopic surgeries. So they've committed to that site. This project will have 24 new jobs to the county. There'll be job retention through Dave's Supermarkets, who will be moving to this site from their Payne Avenue location. There'll be a total retention of 132 jobs on site, with an annual payroll of $9.1 million on this campus.
Questions?
Mr. Chair.
Yes. Mr. Harrison?
Yes, thank you. Can you go back through the our positions and the other investments from the other sources, the city, Jobs Ohio? You glossed over
Yes.
some of those details. I'd like for you to give me a little bit more clarity on our position on both notes and the investments from the other funders for this project.
Sure, I can run down through what the kind of the total amounts here. So Jobs Ohio, they're coming in with almost 3.4 million, and their loan is directed towards the Phoenix building portion, which is our $1.5 million. So we're going to have collateral shared with Jobs Ohio on $1 million, and then $500,000 behind all of that, because Jobs Ohio had a stricter loan-to-value requirement than what we did. So in order to have that shared first, we had to limit it to $1 million on the shared first to satisfy their lending requirements. So our collateral is that building plus the 2 personal guarantees from the borrower, and the other part of the loan is, so the other part of the deal is inside the New Markets deal, and that one gets a little more sort of a little more complex. So basically what you have is you have at the top, Link 59 Leverage Lender, who is that's the entity we're lending our money to. So within that pot of money, within that, there's going to be a HUD 108 loan of $2.2 million. There's our county loan of $1 million that's going into that portion. The city is putting in a vacant property forgivable loan of $180,000. There's a small loan, stormwater loan of $600,000, and the senior debt of looks like around $5.5 million, and another $2 million coming in there. So what our loan is going to be.
You said another 2 million coming in there?
Yes, that's and I'm trying to. I had all of this all together, and I'm trying to read what that is. Oh, I have it more broken. I apologize. I have it more broken out right here.
Just don't know what coming in there means.
That's another. That's a loan. That's a 2.75% interest loan. Also a 7-year. It's a 7-year note. And some of the details are on page 14, but it's 2.75% interest loan. They have a debt service on there of $130,000. So those are all of the loans that are coming into the leverage lender that make up this New Markets deal. Our collateral on that is not a direct collateral in the building, but it's rather indirect because the rules of the New Markets structure don't allow you to take a direct collateral on the underlying assets. So our collateral is an assignment of an ownership interest in that particular LLC.
Okay. And just make sure I'm clear on the 1.5, we're taking the shared first position with Jobs Ohio.
Yes, on 1 million of that, and then
1
the
million.
500,000 will be subordinate.
Will be subordinate to them.
Yes.
Okay. To satisfy their requirements.
requirements.
So that the project as a whole can continue.
Yes.
Okay. I'm having a senior moment. I had another question, but it left me.
come back
And maybe I shouldn't say senior moment.
Yeah. You're about a quarter of my age, so if you have a senior moment,
I'll come back.
guess what
to
I
it.
have? That's right.
I'll come back.
And,
We'll come back in.
I have the clients here,
Yeah, we'll go down here and stay on the financing, and then we'll come back and pick up
and
the
then we'll
client.
bring them. Okay.
Any other
Very good.
questions on the financing? Yes.
The first loan is for $1 million for a term of 7 years, interest only, at a rate of 3%. So the question is, what happens after the 7 years is over?
Okay. What's going to happen on this deal is in that portion of the deal that is Dave's Supermarkets, they will be buying the building from the developer and taking over the building. And they are planning to do that at that 7-year point, which is also at the point when the New Markets deal unwinds and everything comes due at that point. So they're going to, the tenant, Dave's, who they will be buying out that portion of that, and then we'll be made whole at that point.
And on note B, $1,500,000, 10-year term, 25-year amortization, meaning that after the 10 years, most of the loan will not yet have been paid back. So what happens at that point?
Again, when they unwind the whole deal, they'll be refinancing everything on the deal, and so we'll be made whole on that probably at around year 7, and our client will probably speak to a little more detail on that. But it's my understanding around year 7, everything's going to end up unwinding on it. But we have that 10 years on there. We have a little buffer, but the first note you really had to go to 7 because that's the point when that New Markets portion unwinds. So you have to be out of it at that point.
Okay, thank you. Okay, seeing no other questions in regard, I'll ask the Link 59 participation in the Leverage Lender LLC. So we have a piece of that LLC. Is that what you're telling us on the $1 million? We have a share interest in that LLC?
Yes, it's an assignment of that particular entity, because it has to be, we have to take indirect collateral rather than.
And what does that represent of a piece of the total value, share value of the LLC? It must, if they're assigning a piece of the share interest of the LLC, what is that?
Mr. Chairman,
What is the value of that worth?
I'd like to actually bring up Jim Doyle, Michael Panzica from the partnership that can actually give you more
Okay, well, I mean,
detail on the.
this is the first
values of
time,
the
to my recollection, that we're taking a share interest in an LLC. We've taken security interests where we've taken equipment, we've taken buildings, we've taken personal guarantees, but not in an entity itself, I don't believe.
Well, actually, we have.
Have we?
On
Okay.
a couple of occasions, we've done a couple of new markets tax credits. We've worked with inside of a leverage lender structure, new markets tax credits. Fairmount Creamery was one of those, for
Okay,
example.
all right.
So we've had scenarios like this before, and while it's not perfect, and we are in effect kind of trapped inside of a 7-year structure vis-a-vis the tax credits that the investors get, we again have at least attachment to the shares of the LLC, and again are confident with the buying at the end of that scenario, with the grocery store buying this thing out, with refinancing taking place on the Phoenix building, that there will be before the terms are up, that they will basically be taken out altogether.
Yeah, but there are no hard assets that we are taking on this other $1 million.
Correct.
And do we have a seat at the table so we can hear what's going on financially, how this is the structure of this organization, how it's being maintained and what it's doing, and the likelihood that we're going to get repaid at 7 years so we can see the operation
We
side?
can certainly monitor it, and we're a part of the closing activity that's going on right now. When you say seat at the table, Mr. Chairman.
Well, I assume there's going to be regular meetings and there's going to be regular business structure to that organization. Why
Let
don't
me
we go
bring
ahead?
up Jim Doyle. He can
Yep.
say what kind of access we'll have to that
Yep.
activity.
Let me try to cut to the chase
Sure.
if I could, Mr. Chairman. If I'm sitting in your chairs, I'm looking at this deal, you're putting $2.5 million into a redevelopment effort in Midtown at Link 59. Your security really is the 20-year or 15-year lease with Dave's Supermarket on a 54,000 square foot grocery store, brand new, state of the art, and a 30,000 square foot redeveloped research and development building, which is leased on the top floor to a startup company, IAI, not a great credit, but
Right.
a viable going concern with a pretty good startup capital of about $6 million that they've raised. And then on the first floor, the world headquarters of Hemingway Development, you can't get much better credit than that. We'll be on the first floor as our own tenant. But I think from your perspective, where you can take some comfort is knowing that the debt obligation, not only to the county, but everywhere on down in the capital stack, is able to be adequately serviced by those two leases. So the additional leases we bring in to the first floor, and we have two other prospects that would be joining us on the first floor, will be kind of gravy to the deal. Tony talked about how do you get back out, which is the next obvious question you need to ask yourselves. And the answer is Dave's Supermarket do want to ultimately own and occupy their own store. At the end of 7 years, they have a put back to us to buy our interest out, which is a 50-50 partnership between myself, Fred Geis, and Michael Panzica. They'll buy us out. Tony's right. The term of the other balance of the loan on the Phoenix building does run 10 years. That's to be coterminous with the Jobs Ohio loan. Our expectation is, though, when the funding comes in from Dave's to buy out our interest in the Dave's Supermarket, we'd probably take that capital and pay down our obligations over at the Jobs Ohio and your loan somewhere between the 7th year and the 10th year. The deal is structured in a way that there's no prepayment penalties between that time frame. I'm sure you'd be glad to get your money earlier rather than later. And so that's the spirit of the structure that we've got.
Well, the question was going to go to the reverse direction. It wasn't we would be glad to take your money. It was if the event that you talked about of Dave's actually buying and you cashing out and being out of the transaction, just as we had the same conversation with with an investment firm, just through Jumpstart, that if they got their money, that they would accelerate the payment. What would be the harm in getting that same kind of provision built into this? That if you get your money, that we should get our money back, because at that point, there's no reason whatsoever. And I remember asking the same question to Mr. May at the time. If you got your money, why wouldn't we get our money at that same point in time?
True. Well, in fact, in order to unwind the financing at that point in time anyway, we'd have no choice but to retire the debt. So that's not an issue.
Okay, so we'll just make sure that that's covered in any of the loan documents, because if you got your money, the taxpayer should get their money. We should be at the first of the table if we're the good supporters of a project of this
Amen.
nature.
I agree.
And as far as the business itself, as to Link 59 leverage lender, how do we monitor what's going on as far as because this is the second Dave location within a mile of the current location, as I recall.
Well, it'll be a replacement of
You're going to
the,
replacement, but obviously they were in one location, moving to a different location. What is the way in which we can monitor? Because, like you said, we're only in as good a shape as the tenant is paying you.
true.
What do we have as far as assurances that we can be monitoring the business piece of that leveraged lender, which is what I think what you guys are?
Right. I mean, they'll
Can we be
be
sitting
regular.
sitting at the table, at least listening to your quarterly meetings or your bar or your whatever you guys do to be monitoring that?
Well, you'll have, at a minimum, annual financial statements being
Yeah,
reported by
but
Dave.
that's, unfortunately, we all know what annual means. It means that that was something that the guy signed off on 90 days before, which could have been as much as 15 months before an event could take place.
Well, and in the event of a default, there would obviously be an immediate trigger of the expectations of any financials. But yeah, to your point, your layers of defense are going to be, first and foremost, the quality and durability of the income stream from Dave's
Right.
and other tenants, followed by that hiccup, looking at Jim Doyle and Fred Geis as guarantors, because you've also got the guarantee and full faith and credit at Dave's Supermarket. But I'm going to make the assumption that if we're not getting paid at the wholesale level,
That
we're
ain't
not
going to help us, right?
Right.
Yeah,
So
yeah.
your fallback is good old Jim and Fred standing behind the guarantee.
Well, as you're gonna, if you sit around for, as soon as this issue is over, you're gonna hear us go right into our loan portfolio, and we've got some of those on the books where we have some good old guarantees on there that we're gonna be discussing as to what impact, in fact, they are if they're 6, 8, 10 years old in some of these cases. So we're gonna be discussing that. So my concern is actually having more than just sitting at the table listening to a financial at the end of the year, and the accounts are signed off on it, to get some kind of periodic, because I assume you guys have to be having quarterly meetings or some meeting of that nature. If we can get the information as to what took place in your quarterly business meetings or monthly business meetings, whatever you guys frequency you do. Sure.
Well, we won't be doing court, but we'll have regular, and we'd have no problem providing cash flow statements, because I
Right.
think that's what you're getting at.
Yeah, it is.
How is the performance of this borrowing entity on a quarterly basis doing, that's going to be able to satisfy us that we're able to meet the obligations?
Okay, well, I appreciate if we make sure both those things get
Yes,
put,
Mr.
built.
Chairman,
The
we can make
acceleration.
that adjunct to, again, we have the annual financial thing. We obviously, I mean, what our real key here, or our ability to gauge is when we have a borrower that's delinquent. And so, and as you'll hear, and as we've been discussing for the last year, the institution of stronger measures and procedures and monitoring over the loan portfolio and getting on top of anything that's 30 days or over in delinquency on debt service. So those will be triggers that take place right away. Now, if we can certainly build into the contract, into our loan agreement and the note, the issue of getting quarterly statements from the entity in terms of its performance and what's happening.
I assume they have to be constructing those the same as most businesses are doing those on a regular basis.
I must say, I don't have the staff to sort of attend and sort of be, sort of be at the, on a regular basis in all the LLCs that, and entities that are.
Being there and having the right to be there are not necessarily one of the same,
Well,
so.
we can certainly institute the right.
Thank you.
and do it that way.
Other questions? Thank you. Is there an exigency to this also, I assume?
There is, Mr. Chairman. We would
Okay.
like to request that the legislation be approved on second reading under suspension of the rules.
Is there any other questions or discussions? Yes, Mr. Miller?
Yes, just a quick question as to whether we know anything at this point as to what the projected use of the old Dave site would be after this project is done.
I cannot speak to that, Councilman, but perhaps Dave's Supermarket, Aaron Saltzman
Aaron
can.
Saltzman here from Dave's Supermarkets.
Hello, council members. I'm Aaron Saltzman. I'm a fifth-generation family member with Dave's Markets. To speak specifically to your question regarding the eventual use of our Payne Avenue location, we've been operating in that specific store in some capacity. It was our flagship location for almost 100 years. My grandfather spent the greater part of his life there. We have every intent and the commitment to put that site to a use that will be right for that neighborhood. We're in the process of engaging with a group of stakeholders and working towards what potential use might be.
Okay. Is the intent that the new building will actually be rolled into Dave's, or will it be rolled as a separate LLC outside of the organization?
It will be part of Dave's. It's essentially we consider it a relocation of our flagship location and really a commitment and our investment to that part of Cleveland. So it will certainly be part of Dave's.
Okay, so it's part of the corporate as opposed to being a separate entity eventually at the end of 7 years in the new market tax credit, because then it changes sort of who's going to be paying off and who's going to be the security on that.
That's correct. It'll be part of Dave's.
Okay, great, thanks. Other questions from anybody? Hearing none, is there a motion to move this for second reading suspension?
Excuse me, Mr. Chair, I'm sorry.
Oh,
The
we have
proposed
to,
substitute.
yes. We do have a substitute before us. Has everybody had a chance to look at the substitute? Okay, the chair will move that we substitute the language as before us, which actually basically is just administrative change, replacing the language that was as read. Is there a second for the substitute? Any discussion in regards to the substitute? All in favor of the substitute replacing the original language, say aye. Aye? Okay, now we'll go forward with, is there a motion to move the substituted bill as presented for second reading suspension at the next council meeting? The chair will move. Is there a second? It's been moved and seconded. The substituted language has now replaced it. Any discussion regarding that? All in favor, say aye. Aye. Any opposed? Okay, you will have it out there for second reading suspension, the substituted language.
Thank you.
And we have one other item and that is to be an update in regards to the loan portfolio. Just for purposes of anybody in the audience, what we had done at the last committee meeting is that we had a presentation of a partial update in regards to the loan portfolio. We had asked the Economic Development Department to give us an update in regards to the status of 100% of all the loans and to get information regarding that. We allowed the Economic Development Department to pick a date and time, and this is the date and time that they selected to give us a full informational accounting of the status. So I'll hand that over to
Okay, just give me another moment, Mr.
Okay?
Chairman. Trying to do one follow-up item with Mr. Saltzman before you left, so I stepped away for a second.
Okay, ready to go?
Yes, sir.
Okay, now, I know you and I had chatted a few minutes before the meeting, and it was my impression that perhaps we will not have 100% accounting today, and perhaps we will need to have a follow-on meeting at some time down the road. Does that still make sense?
We're prepared to give as full a overview and briefing today as necessary, and you can make the determination whether
Okay.
additional
Well,
questions are. So my
I'll start out
objective is
this
to-
with saying that if you don't have 100%, then we will, we'll follow up.
We are prepared to answer all the questions that we committed that we would have by today. So let me walk through my testimony, which is about 10 to 15 minutes. So I'd ask that you just let me walk through that. I think we've sent that up to council staff earlier. So don't be intimidated by the 17 pages. This really goes through page 12 of content, and the additional pages are backup kind of summations of IG finding, Inspector General findings, and what the office has done to address those findings, as well as a summary of the Ernst & Young recommendations and what we've done to advance those. So, Mr. Chairman and committee members, thank you for the opportunity to outline our progress.
Mr. Chairman,
Yes, Mr. Miller?
I'm sorry, before we start, do we have copies of this presentation?
I don't. All I have is, we have emails that came in just, I think, shortly before. I don't even. Yeah, most of us have been in committee, so we have not, in fairness, do we have it available to put it up on PowerPoint?
We don't have it on the flash drive. I can try to copy it from my email. I have copies of the other documents that he sent. I don't have copies of the 17-page document that he's talking about.
Okay, I'll pick it up later.
Well,
Councilman Miller, I did email it to you.
Okay,
also.
thank you.
okay, this was all this afternoon? Okay, so in all candor, I don't think anybody we've all been in committees the whole time, so I don't know
Okay,
that.
prior to the committee vote, okay.
Yeah.
Thank you for the opportunity to outline our progress on the actions we
So on
have.
the basis, let me just start out by saying, nobody, I wouldn't expect anybody to be able to read 17 pages up here, so we will have a follow-on meeting. We'll just start out by making that statement.
Okay. Thank you for the opportunity to outline our progress on the actions we have taken to improve our loan portfolio management, which includes recording, filing, tracking, and collecting Cuyahoga County's economic development loans that have been poorly managed and underinvested during the past 20 years. I think that we can all agree that the county's economic development and loan programs have made a difference to businesses in our county. Recent examples of value add to our community by this department and our county partners include the loan to 515 Euclid, AKA the Beacon. Work has already commenced, which will provide more housing and retail downtown. The Amazon Distribution Center, North Randall. County investment through the Land Bank to facilitate site prep and infrastructure improvements through Public Works. Universal Windows moving to an obsolete hotel in Bedford Heights, funded by Demolition Fund and EPA money that made this possible. And lastly, the Link 59, which is the committee is currently considering. While the fix of our loan portfolio is a work in progress, and we have made significant progress in improving the integrity of our loan data, remaining problems exist primarily in the older pre-2007 loans. Our decision to fix this issue while simultaneously addressing the organizational, cultural, and management issues identified by both the Inspector General and Ernst & Young as we continue to provide ongoing services to the department has presented its own challenges, stresses, and additional work. Staff has rallied to fix the issues. We'll be working through the end of the year to implement policy and organizational changes to prevent this from happening again while continuing to provide the key services of the department. This is an organization with significant complexity, profile, and moving parts. Today, I'm prepared to answer the questions posed at the last hearing and will answer questions that this presentation may spur. Having said that, if there's any question that we cannot answer to our satisfaction, as you just indicated, will come back and research the question. I believe that this will eliminate any confusion or misunderstandings, misimpressions about the portfolio given its complexity. In my testimony this afternoon, I will address each of the questions and requests for information that members of the Economic Development Committee requested in a previous hearing on this topic. I will then review how the Department of Development has acted to implement recommendations from the Inspector General as well as from our consultant, Ernst & Young. My testimony will focus on 3 areas: short overview of the problem and the process we've begun to address, answer the questions that you presented in the last hearing, and the corrective action going forward. We have made progress since the Inspector General brought this problem to the administration's attention, and have focused on better understanding and addressing the problem since shortly after my arrival in January 2016, while learning the substance and personalities of a new job and business and political environment. While there's additional work to do, we have made great progress to gain a full understanding and control of a complex loan portfolio. We have set new systems, policies, and procedures in place to guard against slipping back to the past problems that the Inspector General has brought to our attention. This is a work in progress and will be a continued focus through the end of this year to fully implement and indoctrinate these changes. I believe that while it is important to acknowledge the findings of the Inspector General and Ernst & Young, many of which I have come to concur with during my 18-month tenure, they do not reflect the work of the entire department. And the reviews have primarily been focused on our economic development vertical and physical unit. Our housing portfolio has not been the subject of scrutiny and has passed several federal reviews. Like many things in life, this department was focused in the past on the sizzle of our work and not entirely focused on the meat and potatoes, i.e. the management and process functions that supported the good work that was being done and that is essential to operational excellence. Briefly stated, over the last 15 to 20 years, Cuyahoga County Department of Development failed to create or maintain a system to record and track all of its economic development loans. Over the past 20 years, the department set up several different kinds of economic development loan programs to meet identified needs, ramping up activity while not correspondingly investing in back office infrastructure to support the loan servicing and management. The Department of Development formally allowed the staff involved in making loans to also track the loans, report on loan status, and deal directly with borrowers for collections, refinancing, and other types of portfolio management. This led to fragmented records and made the county vulnerable to loss of critical information on its loan portfolio. The historic problems that have been identified were further exacerbated with the introduction of new loan products, several office moves, poor record keeping, significant turnover, poor management practice, and understaffing. Add to that equation a very complex operating and political environment, and you have the situation that we are discussing today. This is where this would be. The timeline below provides an overview of the significant work that has been done during the past 18 months, with an emphasis on the past 6 months to correct the weaknesses identified. So in summary, I arrived here in January 2016, and over the next 90 days was educated on the various Inspector General reports that had been written as part of my onboarding and conducting employee and stakeholder interviews. This issue emerged. Early in my tenure, I approved additional portfolio training for staff, and this is one of the findings in the Ernst & Young report, that portfolio training has to be consistent and mandated. In March and April of 2016, we met with the Inspector General of the Law Department to begin discussing issues that he identified and how to develop a plan of attack to resolve. I also approached the National Development Council to ascertain early on their interest in assuming responsibility for managing the loan portfolio. They did a brief assessment and review and demurred. In March and April of 2016, we began to draft the first statement of the works, working with the Chief Innovation Officer to do a comprehensive organization review of the office with a focus on the loan portfolio. In May 2016, the Chief Innovation Officer assigned the Director of Consulting to work with the Department of Development to apply for a Lean Ohio grant to improve our process, to create process improvement tools around the processes of our loan portfolio and complete a project to improve those processes within the Economic Development Loan Program. Additionally, the Director of Consulting of that office worked with the department to finalize a scope of work to support an RFQ for this review that I just talked about. RFQ was issued in June of 2016, and in that month, I reassigned a housing staff member with a finance background to assist with loan portfolio servicing for 50% of the time. In August of 2016, we interviewed the RFQ respondents. I think there were 5 or 6 of them. We also sent a number of delinquent loans to David Douglas for collections. In September 2016, there was initial loan policies and procedures drafted by staff, which was developed from the Philadelphia Industrial Development Corporation. In October and November 2016, Ernst & Young was ranked as the highest respondent to the RFQ. November, December 2016, the Inspector General issued a draft report number 3. Board of Control approved the EY contract, and we also requested a new loan portfolio manager position for mid-year budget, which was approved. In March, February, and April 2017, there were a number of additional actions that were initiated to address this problem, to include approval by Executive Budish for a 9-member multidisciplinary cross-functional county team to support our office in the review of files, cleanup of data, and analysis of portfolio issues, also known as the Economic Development Improvement Team. That team was mandated to work with my office to do a comprehensive review of the data and ensure data integrity. That team was supported by Ernst & Young in terms of reviewing some of the loan files. We provided comments to the Inspector General in May of 2017 to his draft report, with a final set of comments given in June. E&Y completed their assessment and recommendations. We also responded to state auditor requests during that time. The edit team did an exhaustive search of all areas where loan data, historical loan data, could be located or found, to include electronic files, offshore file storage areas, and other locations. We also issued an RFQ for a third-party portfolio manager and loan service provider. And we, during that period from May through July, began bi-monthly meetings with the county exec, Inspector General, and edit team leader to provide updates and overview of the data integrity of our loan portfolio. During this time, the county executive and his leadership team have been intimately involved in helping to think through challenges of our loan portfolio and to develop a strategy for correcting them. This included approving resources for the Ernst & Young review and authorizing the redeployment of county staff to this effort, digging into the details of loan quality and record integrity, and working with the Inspector General to collaboratively address issues that were raised in various aspects of his reports. I would like to just briefly mention the time that the executive have taken to engage in this issue. In my experience working with CEOs in both the public and private sector, it is highly unusual for a CEO managing a span of control of this magnitude to devote the time and attention that Executive Budish has. It reflects the importance the executive has placed in getting this issue fixed and providing confidence to the public that this government is committed to operational excellence and transparency in both word and deed. I've already talked about the internal staff that has been reassigned to support the loan servicing. I've also, as part of my budget request and the go-forward strategy, requested several additional positions to backfill some of the infrastructure and back office resources that are needed to ensure that this doesn't happen again, to include the hiring of a loan portfolio manager and some administrative support for that position. That is in our 2018-2019 budget request. The intent is to segregate loan servicing from the origination of loans, which has historically been the case, and we are going to upgrade and backfill the deputy director position to a chief operating officer, to which the economic development vertical will report. Concurrent with that, we will implement, working with HR, higher performance and accountability standards through performance management, and improving connectivity and interaction between our internal fiscal unit, the economic development vertical, and the county fiscal office with respect to the recording of transactions and collections. We have now also mapped our entire loan process so that economic development fiscal staff can see the process end to end, and they will be required to review and understand that process. We have also done this mapping with our external partners. In the area of training, there will be mandatory training for all loan officers, the loan portfolio manager, myself, and the deputy chief, with regularly scheduled training modules for staff. There will be ongoing review of new policies and procedures. So at the end of June, we implemented a new loan policy and procedure manual. And so we've done an initial orientation where loan staff have been required to sit through that policy and procedure manual, so they have a clear expectations of what is expected of them. And so that will be done on a regular basis. And then I expect to be having periodic management reviews and assessment with our Office of Improvement. So to the specific questions that were asked at the last hearing, let me walk through those. Question one was the total expected amount of 2018 loan repayments. Total loan repayments that are expected for calendar year 2018 are approximately $4.4 million. Total amount, number two, total amount of loans with Douglas and Associates. Staff reviewed each of the 99 loans currently placed for collections with Douglas and Associates. The principal amounts due to Cuyahoga County are $7.5 million in principal, and current payoff amounts, including accrued interest, are approximately $9.7 million. The committee asked about the aging report and breakdown of delinquent loans by years. As of September 12th, 2017, the number of delinquent loans settled during each of the 4 periods requested are as follows: 1999 to 2006, 41 delinquent loans; 2007 to 2010, 50 delinquent loans; 2011 to 14, 21 delinquent loans; 2015 to 2017, 8 delinquent loans, for a total of 120 delinquent loans, 99 of which are with David Douglas and Associates. And I do have a representative here from that organization to answer any detailed questions about their collections process and how they envision recovering county monies and the success they've had to date. The balance of the loans, the differential between the 99 and 120, are currently engaged in pre-collections activity. Another question that the committee had was, how many loans are there with personal guarantees? So of the 293 loans that we have now accounted for and identified, there are 108 that have either a personal or corporate guarantee. The next question was, please identify loans involving persons or companies named in the corruption scandal. Staff cross-checked the borrower and main contact person for each loan against the Citizens Reform Association of Cuyahoga County report entitled Who's Who in the County Crisis, which listed over 400 individuals and 100 companies mentioned in media reports and other public documents as having connection to the corruption scandal. One borrower company was listed, already identified by the Inspector General in a previous report. That's Deep 3 Partners. That loan was paid off, and we have identified another person whose name has been provided to the Inspector General. The next and last question was loans which are open versus terminated and available documentation. So we have identified 293 loans that we've identified through this process of going back and reviewing council resolutions, Board of Control resolutions, if appropriate, and/or disbursements. And that's the number we've currently arrived at. And so out of that total, there are 130 active loans. I'm sorry, 250 active loans. So I'll stop there and take any questions.
From the chair, just so I can understand, point 3 and point 4, loans with personal guarantees, the 108, how many of those 108 are in the 120 that are delinquent loans that are addressed above? which was really, I thought was what the substance of what that we were trying to probe into.
I'm sorry, repeat the question, Mr. Chair, just so I make sure.
Yeah, you said there's 108 with personal guarantees. How many of that 108 are within that 120 delinquent loans? In other words, that somebody within that body of 120 delinquent loans has a personal guarantee of which we can move on if we decide to.
Mr. Chair, I'm going to just turn to a staff who's drilled into this because I don't want to give you.
It's okay.
Okay.
And if we're asking questions that are not, that are in depth, I don't anticipate everybody's going to dig through 13 pages right here as we sit here, so.
So let me commit to, I think we should be able to get that back to you and send an email tomorrow, just so I give you a precise answer rather than with all these moving numbers that I.
Well, if we got delinquent loans, and you just heard the questions we
Right.
were asking of that past issue that was here, we were trying to identify what security
I
we've got.
understand the question.
And one of the last elements of security is a personal guarantee from whoever the borrower is.
Yep.
And I think that we need to be prepared to at least ask the questions about whether whether those mean anything to the county or whether they don't, if we're going to ever exercise in that. And I, just in fairness to the members of the committee, I don't anticipate that they should be reading 13 pages up here, that they would have time to come back. We'll set a date after everybody, I'll talk to my committee members and say, okay, what's reasonable and what's reasonable for you too. We don't want to jump on, I know you guys have a lot of things other than this to do, but we'd like to get this thing completely identified, and you'd like to get it behind you too. So with that, Mr. Miller, questions?
Yes, Mr. Chairman, Director, first, thank you for the answer to the question about the total expected 2018 loan repayments being $4,417,000. And my question about that is how much of that is regular routine repayments from loans that are not delinquent, or if they are delinquent, we've been in touch with them and we've reestablished payment, and that we expect that they're going to pay, and how much of that is delinquent loans where part of that money is money that's behind schedule.
Yep. I'd have to get back to you with a precise answer to that question, but we expect, this is what we, based on what's in our system, we expect to receive some payment on. So typically we don't know until someone says, I can't pay, but based on what we have in our system at this moment, this is what we expect. And if for some reason, so now we're improving our billing and invoicing process, someone identifies that they're unable to pay, then we initiate our engagement process.
Okay, let me ask another question. It's a close variant of the same question. I'm trying to get an idea of, is the $4,417,000 a good representation of what we would expect to get on an ongoing annual basis from our loan portfolio, or is it higher because it includes anticipated collection of past due amounts?
It's a little higher than what we've had historically, but that number has gone up over time. And so this, yes, so it's a little higher than what we've historically collected.
If I might, Mr. Miller, what's the current amount of that 4.4 versus payments of any other way in which the payments are being made?
Yeah.
I mean, the current, it would mean it's within terms versus payments of catching up on a delinquency or anything of that nature.
Okay, let me ask Mr. Hurdick to come up and just break this down a little bit.
Absolutely, thank you.
Members of the committee, Paul Hurdig, work with Ted Carter. To answer the specific question, the projection is only scheduled current payments. The computer program that prepares it does not include any anticipated catch-up delinquencies.
Okay, so all the 4.4 is current?
It's scheduled for next year.
Right, right, so that, assuming everybody's on board with where their payment schedule is, that 4.4 should be should be a current, because my guess is, Mr. Miller, is, next question is, then we can put that money to work doing something else and loaning it out to the next folks if it's going to be in our fund.
We're exactly going down the same path. If we actually achieve a number in that range, we've made some decent progress toward the goal that the executive has announced, that we have a sustainable economic development program using loan repayments where we would not have to use significant amounts of money from the general fund for that purpose.
Other questions on this? And we truly do appreciate the work that went into this, but also please appreciate that I would not expect everybody to digest this quickly. So we will. It wasn't anything other than the quality of the work is probably more than enough to give us the tools to dig into it. But rather than ask everybody to do the work right now and do that, we'll get back with you probably in a week or so. We'll set something down the road in 2 or 3 weeks, and then we'll come back in. And maybe the answer is you've answered every question. We don't even need a scheduled meeting.
Okay, that would be ideal. And we'll get back to you very quickly on the subset of the 120 versus the 100.
Okay,
question.
Thank you.
Thank you, Mr. Chairman. Mr. Carter, as far as the delinquent loans that are out there, do those parties at this point now, after having gone through several of these meetings and talking about the procedure and such, do those parties now have noticed that they are delinquent, and is there a procedure in place to collect from those delinquent parties? Does every party have noticed?
I would say with confidence that the delinquent loans during this administration have been touched. We're in the process of kind of going back through the other years.
Okay.
Yeah.
Okay.
And that the 99 loans that have been sent to David Douglas and Associates, they've triaged those loans, so they could speak to the kind of their process. They're going, starting with the loans that have the highest degree of collectability, and then working their way.
Okay. And will we hear from them at some point, or are we just?
We can, sure,
We
they're here.
can if we could I
Sure.
do that now if the gentleman's here or the woman's here? Okay.
Somebody from Douglas and Associates? Came all the way here, you want to at least
Yeah,
get a
you might as
chance to chat, right?
Good afternoon. My name is Mike Reardon. I'm an attorney with Douglas and Associates. To briefly speak to the process that we've gone through with the county loan portfolio, Mr. Carter indicated the first step we took was a triage. We took a portfolio of relatively ancient loans, scrubbed through the data to figure out which of the borrowers had filed bankruptcy, had died, et cetera, et cetera. Those files we suggested be closed almost immediately. Once we got through that process, the next step we took was document verification for each loan, each separate loan. There were numerous different programs. There's different loan documentation for each particular program. So there was a learning curve for us to review, loan agreements and documents that might be 100 pages per loan. Then working back through that, figuring out what additional information we needed. So we're at the point now where we're trying to complete the balance verification. And then once we complete that process, then we'll be able to go through the process of actually beginning legal collections.
Okay, so at this point then, just to clarify then, have you collected anything on the delinquent loans? Or are you still waiting to go through the legalities of it through the courts?
Funds have been recovered.
In what amount are we?
In excess of 50,000.
Okay.
So, but that's a case where we're in the process of reviving a judgment.
Okay,
There
right.
were objections and appeals, and so
Right.
it's kind of tied up at the moment.
So do you have an idea, and I don't mean to cut you off, I'm just trying to, do you have an idea as to what is outstanding then from the judgments, or I'm sorry, from the delinquencies that you've collected so far? So I guess what figure are we looking at then as far as what's outstanding? Then you said you collected roughly 50,000.
I don't think I could tell you a specific number of what the
we've-
portfolio.
Mr. Tuma, we've asked that question. So if you look at the 9.7, the outstanding balance, the majority of that in terms of value that they are pursuing are with these old loans that were high risk. So I think, as we've talked about before, the likelihood of those being recovered are probably small.
Okay.
But we've pressed them, and they're just reluctant to do that because of legal process. And that's why they have to go back to the original loan agreement, see what was, what the terms were and what the expectations were. And so a lot of the time we spent over these last 5 months is going back and recreating these, finding the file, recreating the files, and then getting them over. And we still have a little work to do around loan balances so that they can then start. What we have done in conjunction with their firm is select borrowers we've met with individually to begin to understand so that they know that the county is engaged, just not a third party that's pursuing collections, and on these, particularly these high risk, what I would call exploratory innovation loans like the North Coast Opportunity Fund and the New Product Development. So there's probably close to 70 loans out of that 293 that fall in that category. And most, once they hear from our office, they're eager to either continue payments that they're making or just get this resolved because, they don't want the public exposure.
Okay. And I'm sorry, your name again? I'm sorry.
It's Mike Reardon.
Okay, Mr. Reardon. When contacting these people who have the outstanding loans or companies that have the outstanding loans, generally speaking, are they surprised or are they aware that they're outstanding? Or I'm just trying to gauge from their perspective if, geez, I didn't even know about this, or this was years ago, or what's been their reaction?
They all remember.
They all remember. Okay. All right. Thank you.
Following up on the remembrance and the clarity, do we have all the paperwork? Do you have all the paperwork you need if we needed to collect on these things out there? Do you have the loans and the documents and the filings? Because that's something that we've been hearing that we don't necessarily have all the paperwork. Do you have all the paperwork for the 99 that are in your possession? That if you had to go to court, you think you could actually establish a legal obligation for them to pay us?
There might be a handful that we don't yet.
But relatively, you've got
almost. I'd say almost all of them.
And of the 99, you said two items, maybe the borrower has since died or there's bankruptcy. How many of the 99 fall into that category that they've?
Probably a dozen.
Okay, on each one of those accounts, the bankruptcy?
Bankruptcy primarily.
Yeah, okay, so they're still alive. And are the liens still identifiable, that we've got a lien on a building or a lien on equipment or anything of that nature that are still recorded?
Some of the financing statements have expired. They weren't renewed.
Oh, okay, all right. And so we could be back in a second or third position on those if they've refinanced that piece of equipment through somebody else?
Potentially, yes.
Yeah, okay, all right. Yeah, you're just telling me all kinds of pearls of good stuff here. I assume at some point you're going to.
I am an optimist.
Well, I am too. Well, we're at least moving along. The first step of solving the problem is identifying it, and so at least we're to that point now. When you have those initial conversations, are we moving right to settlement or trying to write off or working with the client? Or are they willing, to Mr. Tuma's case, recognizing they still owe us the full value of the loan? If I'm in their shoes, I'm gonna try and negotiate. If I'm in their shoes, figure out a sight out of mind.
I think the general flavor of the conversations has been that the money was lent to an entity that hasn't found its market yet. Their products haven't gotten approved yet. They're still waiting to find a market. But once the entity starts generating revenue, then yes, we'd be able to pay.
Okay, at least they're recognizing an obligation to pay.
Absolutely.
And then the next step is, do they have the ability to pay is the next question. Is there any advantage to trying to restructure the loans to that maybe would be advantageous to us? So I have no idea whether we would not necessarily be issuing brand new loan to them, but at least to to get some kind of a payment history.
Mr. Strawn, I'd say our goal and the executive's goal is to collect the maximum amount possible. So part of this engagement is just to dig underneath the hood a little bit, understand the company. And again, as I said, a lot of these loans were in these two, I won't call them exotic programs, but they were forward-leaning. And so that there may come a point where that's a prudent course of action, but that's not our starting point.
Okay, well.
And once we staff up and get the loan portfolio manager, that person can really engage these companies at a more tactical level and figure out and make a recommendation as to what the end result should be. And that won't be kind of an en masse write-off. So now in our loan policy and procedure manual, there's a process for getting approvals for those type of settlements.
Well, if their product never came to fruition, and they don't have a market ability to sell it, that you can only do so much unless this 108 personal guarantees truly has some assets behind it, in which case then the anxiety factor on their end goes up considerably if it's enforceable from that standpoint. Other questions or comments? Yes, Ms. Baker?
I would just like to reiterate what you said earlier. I have not looked at this first 13 pages, so I would like to have a little time to digest it. And also, perhaps in the next meeting, which I anticipate we will have, have a little bit more specific answers to the questions that have been asked, instead of I think, or generally speaking, or maybe really have a little more concrete numbers to the questions, and look forward to digging a little deeper. But I appreciate the work that you've done. You certainly are showing that we're moving in the right direction. But I don't think we're quite there yet. And I would have liked to have had this report maybe a couple of days ago, so I could have asked questions without trying to read through it and ask at the same time.
Well, we can't undo the past, but we can make it a prologue to the future that we'll also get questions if we have any specificity. Is it appropriate to be sending them to Mr. Reardon also, or should you want
I'd
them all
ask
to
that
go
you
through you?
direct that to me or the law
That's fine.
department. So,
Okay,
yes.
that's fine. Okay.
And we'll make sure he'll get them.
Do you have a Kentucky windage as far as your percentage, you think, of loans to collect? Not dollars, just loans. You've got collect of these. You've got 99 of them, less the 16 or so that are bankrupt.
The hard part is we don't have a historical reference point. So for some of our other clients, we can look at a program and kind of project based on what we've done with similar loans with similar borrowers. So we just don't have that. I don't have a sense of kind of the history here.
We did ask for an aging on this, and on the aging, it looks like 41 of our loans date back to the prior period of time. We didn't pick the 2006 or 2007 break. That was picked by Mr. Carter. And so we asked what were those? Do we have any payments for any of those 50 or 91 loans? I assume some of those are in your bucket.
Yes, we do.
Some people have actually made some payments? Okay,
Yes.
good. Well, that's a good sign from that standpoint. Mr. Miller? Yep.
I noticed that there were 8 loans in the 2015 to 2017 timeframe that are delinquent, which are very recent loans. Could you provide us some color on how that occurred and what kind of loans, and also that's 8 out of how many that we've done in that time frame?
Sure. Be happy to do that, Mr. Miller. That will be an item that I'll get back to you on, again, just for precision's sake.
Why don't you just go ahead and, with it only being 8, why don't you actually name the borrower, because those will all be fresh in everybody's mind.
Makes sense.
We would have all have seen those within the last 18 months.
Okay.
And I mean, for them to be delinquent with only a year and a half into their loan portfolio is very disappointing. You don't have to do it now either. I mean, you can send it to us, but we should be able to map 8 to 8 pretty correctly. And that, I hate to say it, but that's under your tenure in that respect.
Yep.
Thanks. Other questions, comments? And we do, my hat's off to you. Every dollar you can bring back in is a dollar we can put more to work building jobs here in Northeastern Ohio. Thanks.
Thank you.
Good luck. May the force be with you. Thanks. Yeah, may the courts be with us. Yes, that's right. Yeah. Questions, comments? Mr. Carter, anything else? Yeah, well, I don't envy you because you picked up you were dealt a bad hand at the cards, but those are the cards that were on the table, unfortunately, when you came here. But hats off to you for taking the steps to start getting it addressed. Like I say, the first step of solving the problem is to identify it. The next step is to get the pieces together, and then let's go down this path and see what we can do to put it together. Thank you. God bless. Is anyone else signed in, not related to the agenda?
No, Mr. Chair.
Okay. Hearing nothing else, adjourn the meeting.